Hi there eToro, it's Wes, and it is Monday the 25th of October 2021. That means it's time to look at what moved the markets last week. So the S&P 500 has put in a return of 31.64% over the 12 months ending last Friday, whereas my portfolio has put in a return of 34.5%. I had a few comments from copiers last week that I wanted to talk about quickly. So earlier in the year, I did mention in one of my videos that I wouldn't be comparing myself to the S&P 500, and I know that I still am doing it here. The reason is that I trade stocks that are not only outside of the S&P 500, but also in completely different geographies. So using the S&P 500 as my benchmark is kind of a weird thing to do. I'm comparing oranges to nectarines, right? So they're similar but not the same thing. So it doesn't really make sense. So what I have done in some of my documentation, and I haven't updated it everywhere, but it is in my eToro profile, is I've changed that target instead to be 30% on average through my lifetime on eToro. Now, it's pretty obvious to those of you that have looked at my stats that I'm not going to hit that 30%, well, probably not going to hit that for the calendar year 2021, despite I'm still hitting it for the trading 12-month period now. So that's fine. Every once in a while that'll happen, but I don't expect it to stay that way. The second comment that I wanted to talk through, and this is one that comes up quite often, and I think it's from people that are less familiar with investing. People complaining or challenging me when I close out positions in red. And I'm happy to take any questions or any challenges that people want to throw my way. But closing positions in red sometimes is all part of investing. Any investor is going to have to do that. Over the long term, no one is going to close all of their positions in green. And there's a reason for that. So if we take these Delta airline positions that I closed, I held them for quite a long time. There was a thesis that I had, which was the coronavirus pandemic will begin to wane and travel will pick up in the US, and over summer there'll be a huge amount of travel, and this will do very well for the likes of Delta Airlines. Now that didn't happen. The Delta variant was so aggressive that it stuck around for longer than most people had anticipated. And this meant that airlines didn't do as well as they were forecasting, or that I was forecasting. So in this case, I still think Delta Airlines is probably a good buy, but now we're going into the part of the year where there are less flights. It's the weaker part of the year for Delta Airlines. And so for now, I'm okay to take the loss, and then I'm going to move my money somewhere else that I think is going to do better for now. So for example, I think I probably move this money into something like Coinbase. And so instead of that money just sitting there being negative through the next few quarters while I wait for a recovery, I deployed it to Coinbase and turned it into a profit. I hope that makes sense. That's my abbreviated version of why I've done this. There are a few different nuances to it, but the important point is taking a loss in a portfolio of investments is something that everyone has to do at some point. If they're not doing it, something is wrong. Just taking a look at the 1 week performance across all of our stocks. So there's not much of a pattern to where the winners were and the losers were, except for UK travel stocks. So I think the fact that our coronavirus cases have started to rise quite aggressively again has stoked fears that there are going to be additional lockdowns. In fact, there are groups calling for additional lockdowns to start immediately, but the government has said that they're not going to do that immediately. But the fears are there, and so I think that these types of stocks have been affected most heavily through the past week. Other UK stocks have been fine though, and you can see that the gain is the winner through the week. There's no particular pattern that's easy to call out. Starting with the UK, so we got a few bits of economic data out of the UK last week. Interestingly, CPI data, consumer inflation, was slightly lower than expected, but I don't expect this to be the case going forward. Retail sales were quite a lot weaker than was expected, and potentially this is why we were seeing this lower CPI number. Both of these numbers they look backwards, so they can't tell us anything about the future. They're lagging indicators, in other words, whereas the leading indicators, these PMI numbers about manufacturing services and the composite number, were beats in terms of the forecast. The actual numbers were higher. And so this is showing that growth for October is likely to be stronger than was anticipated. So we're getting some mixed signals, but growth is still there. Probably the most interesting piece of news that I've been following over the past weeks is the UK government starting to get behind nuclear power. Now, nuclear has formed part of our strategy for a long time, but it looks as though the UK is now making this officially a stronger part of their strategy. Now, some of you might know that Rolls-Royce is a company that's famous for making engines, particularly engines used in planes, but it is also the leader in a consortium of companies that have designed a type of nuclear technology that fits within the SMR category, small modular reactors. The problem is that everything that they've created so far is theoretical, and they need a hell of a lot of money, billions and billions and billions of pounds, to get the project off of the ground. This seemed like a pipe dream months ago, but through all the challenges that we've had around energy, and now leading up to the climate change conference that kicks off this week, the UK government has gotten more and more behind this particular project, saying that they will provide investment to help kickstart it. This is fantastic for Rolls-Royce, the company, and the other companies involved in the consortium. And if the technology is able to be brought to market, it'll be fantastic for the world too. All right, looking at the US of A. When the week started, US indices were doing very, very well. You can see the nice big jumps that we saw in the S&P 500 as the week started. But by Thursday, Friday, things started looking a little bit less optimistic. And this is largely because of the earnings that we saw coming out. Some companies did very well, but some companies that are kind of bellwethers within their industries reported awful, awful earnings. So this is the one-day view. I wanted to bring this up because it shows you how badly some stocks, specific stocks, traded on Friday. If we look at the 1 week performance, the picture looks a lot more green, but we can see that there are certain areas that haven't done very well through the past week. So calling out a few of the headliners, IBM reported earnings and the share price fell off a cliff over the following 2 or 3 sessions, falling up to 10%. This, I think, has accounted for some of the drop that we saw in Amazon on Friday. People are worried that the demand for cloud computing services, particularly around infrastructure as a service and platforms as a service, are weaker than investors had thought going into earnings. So we will see when Amazon reports earnings this week, I guess. Another of the big companies to report and have a massive flop were Intel. So Intel has a new CEO, a new chief at the helm, but I've been a little bit concerned about how difficult it was going to be to turn the company around. Semiconductor businesses are companies that require huge amounts of capital investment, and they've gone from being the leader to being a laggard, and they want to get back in front again, but it's not going to be a short journey, and it's not going to be a cheap journey. The key things that hit the share price recently when they reported were, one, something similar to what Micron mentioned when it reported earnings. Those businesses that create PCs and then sell them on to customers aren't able to support all of the bits and pieces they need to complete a PC in order to then deliver it. And so that means that sales and deliveries at these types of companies have slowed, and then any supplier that's involved in the creation of PCs has suffered because demand by PC makers has dwindled. This is part of what Intel has seen. It's not the cause for all of the drop though. Softer than expected demand from the PC segment was bad, but even worse was that the company thinks that they're going to need tens of billions more in terms of investment than they'd earmarked earlier in the year in order to become the business that they need to be. So I'm not sure how many of you are following the news, but companies such as Amazon, Google, Apple, they're all talking about designing their own chips, which means that a part of Intel's business is going to start losing market share. So they're shifting at least part of their business to become more of a fabricator. They need to build these huge fabricating facilities, which take a long time to build, require lots of money, need lots of very, very smart people, very specific equipment. So the stock market didn't like that. Unfortunately, that sentiment that bled into the rest of the semiconductor industry. A few companies escaped relatively unscathed. AMD did pretty well out of the week. I guess the market thinks that AMD is going to pick up the slack where Intel has been losing, and I've taken the opportunity to take some profit on AMD in the meantime. It's been quite a good run up over the past few months. And then finally, I wanted to talk about Snapchat. They posted earnings, and in one session, their stock price dropped 26%. They are the first of the major social media companies to report earnings. And the reason for this drop is that the iOS privacy changes that were introduced into all iPhones and I guess iPads mean that they are not able to generate as much ad revenue as they were before the change. Now, everyone knew that the changes in iOS were going to affect social media companies, but Snapchat is saying that it affected them far more than they realized. So this means that when Snapchat reported those earnings, companies, particularly the mega caps that are involved in advertising, so I mentioned before, Facebook, I think 99% of its business is based on adverts. Investors are anticipating that all of these companies have taken something of a hit based on the changes to iOS. And we'll find out tonight because Facebook is reporting earnings. So we saw a sell-off there. I wonder if Amazon took a bit of a knock too, because Amazon is a bit involved in the advertising game these days, for those that don't know. It's one of the fastest growing, highest profit areas of the business. This week is going to be a mega week for earnings. I think more than 200 companies in the S&P 500 will report earnings this week. I don't think we're going to see blood across the board. I think we're going to see some companies doing very well, others doing very badly. The forecasts are what investors are going to watch quite closely. So we might see some volatility, but I still think that we will see some really good results out of probably the majority of the businesses. Jumping across to China. So KWeb, I mentioned this before. So this is the internet portion, the technology portion of the CSI index in China, has seen quite a big rebound, I think 20% from the lows at the beginning of October. So it feels as though we have found the bottom of the sell-off. There's still quite a march the index and all the stocks in it need to make in order to retake their highs, and that could take years to reach that level again. But it does feel as though sentiment is shifting, and this is reflected in various stocks too. Alibaba is up, I think, 30% from the lows. Baidu, I think, is up 20% from the lows. Even Evergrande is doing okay. The stock is closed a little bit up today, and this is because they did manage to repay some of that dollar-denoted debt. They missed the payment initially, but they did pay it in the end, and they've also said that they are going to restart some of their construction projects. Given what feels like a change in sentiment in China and some actionable data that we can see in the various charts of the stocks, I have added a small position in Alibaba through, I think, the past week or two. We're not out of the woods just yet. So China has experienced another lockdown, and many of the challenges that have existed around China and that have brought the share prices and index prices down through the year still exist, but it does feel as though sentiment is shifting. I'm not sure how many people know this, but US equities are largely owned and managed by institutional investors. Within China, the picture is quite different. I don't know, I think this number is from 2019, but at that point, 99.6% of investors in the Chinese stock market were retail investors. Retail investors behave very differently to institutional investors. This is because their position sizes are smaller, so they tend to move around more quickly and more frequently, but also they're a little bit more susceptible to fear and greed. This is something to bear in mind. I'm not sure if you've noticed, but even if we look back beyond the last year and a half, Chinese stocks tend to be more volatile than stocks in Western markets. Let's take a look at the rest of the world segment. I would like to highlight two things today. The first is that I have closed out my final positions in SolarEdge. I almost always have positions in SolarEdge. I've held them for many, many years, but I have a feeling that solar companies have not only had a difficult quarter, because they are the types of businesses with razor-thin margins, but also that they might be forecasting weak quarters going into the end of the year. I'll definitely be back at some point, but for now, I'm happy to take my profit and move that money elsewhere. The second area that I wanted to point out was Brazil. So Brazil is an enormous country within South America. It has a large effect on South America in total, and it has been experiencing many, many challenges through the past few months, all the way up to the presidential level. So as you can see, the headline here, economic officials have been quitting. The president is in a lot of trouble, and different types of trouble. There are people that are calling for him to go to jail, to face courts, and he is looking to do some things that have been called by some people quite dodgy. So he's trying to move money around the economy towards the poorest families, which you might say, that sounds fantastic. But he wants to do this in order to gain some support going into Brazilian elections next year, because he's not very popular. The details are very, very interesting, and it'll take you 5 minutes to read up on them if you just Google about it. But this has had a major effect on Brazilian stocks and Brazilian indices. So you can see from the EWZ ETF that since roughly June time, the index has been dribbling down. So in other words, the stocks that represent this ETF have been falling off a cliff for many, many months, and are now back to levels first seen more than a year ago, in June 2020. This has affected other stocks that operate within the region. So Mercado Libre operates through more than just Brazil, through the whole of South America and other regions too. But Brazil is its largest market. And the company is listed in the US, but it has taken a beating in part because of the things, the goings on in Brazil. So you can see that over the past month, the company's lost 20% of its value, tried to rebound, and then dipped towards the tail end of last week. This is still one of my favorite companies. This company is effectively the Amazon of South America. This is a company that has weathered many storms in South America. They're not a young company. They've been operating there for decades. They're a company that's been growing their market share, not only by acquiring more users, by penetrating these markets even more deeply, but also by creating additional products, for example, payments and other financial products that sit very well alongside their other product set. I mean, you can see some of the stats here. The 5-year CAGR is 43.6%. Earnings has been on a huge tear. The forecast EPS growth is 224%. This is just a fantastic, fantastic business. So this looks like an opportunity to me. I'm sure that there are many other opportunities, but I don't know the rest of the Brazilian and South American market very well. All right, time to look at what's going on this week. I touched on it a little bit earlier. We're going to have COP26 kicking off on Sunday of this week. And I think it'll be very interesting to see what countries are saying as part of this event in general, just to see the overall direction that the countries that lead the world want to take the world over the next 5 to 10 years. But there are also likely to be some very good hints at areas that'll be good for investment. In addition to this, I already mentioned we're going to have a hell of a lot of companies reporting earnings this week, and I think this will be probably the major market mover depending on what we see out of those earnings. And then finally, we have the usual slate of economic data, although this week I would say it's a little bit lighter than it usually is, except maybe for the EU. All right, that's it for this week. I hope you found that interesting and useful, and I will talk to you again next week. Goodbye.